Hello, everyone. Happy Monday. I hope everyone's having an awesome start of the week and it continues to go that way. So I'm here to keep you up to date with current market news and teachings. This is in no way, shape, or form financial or investment advice. This is for entertainment and educational purposes only. So I'll go ahead and jump right into it. So let me share my screen. So kind of found another beautiful example of an arbitrage in the stock market. And in this case is Black Knight Inc. So one second. So basically Black Knight Inc. What do they do? Black Knight Inc. provides integrated software data and analytical solutions in North America and internationally. The software solution segment offers software and hosting solutions comprising MSP, a software as a service application platform for mortgage, home equity loans, and line of credit service, seen digital, a web and mobile solutions for customers that provide easy access to customized, timely information about their mortgages. So basically, this is a tech company that provides services for mortgages, loans, home loans, lines of credit, and so forth. So this is they have two reporting segments, basically where their income comes from, the revenue. So that the first one would be software solutions, and the second one would be data and analytics. So the arbitrage comes from a potential merger agreement. So the company ICE, which is Intercontinental Exchange Inc., has announced that they want to acquire Black Knight Inc. And basically purchase them out, buy them out, right? So buy the shareholders out to gain control of the company, right? So basically the merger agreement states on May 4th, 2022, we entered a definitive agreement to be acquired by Intercontinental Exchange, ICE, a leading global provider of data technology and market infrastructure, in a transaction valued at approximately 13.1 billion or $85 a share. So the company is currently trading around like 63 bucks, almost 64 bucks a share. So the arbitrage here is basically if you believe the company is going to or ICE is going to acquire Black Knight, you get the difference as a shareholder, right? So if it's trading at 63 and they're going to buy it out at $85 a share, in the case that the merger does occur, you get the difference, right? Which I'll go into a little later. So basically the agreement of the acquisition, $85 per share, with consideration in the form of a mix of a potential 80% cash, 80 and 20% stock offer, which would be 20% of ICE. The offer would be the 20% stock offer would be ICE stock, right? So it would be Intercontinental Exchange stock that they would then offer as that 20% of the offer. And ICE is currently trading somewhere around like 118 bucks a share. So it's a big company, right? ICE is not a rinky-dink company. They're basically a monster company that manages and controls exchanges, right? So if you sell any kind of stock, buy any kind of stock, trade any kind of stock in all kinds of different markets, you're probably in some shape, way, or form using ICE services. So this merger is expected to occur or close by. So the ICE transaction is expected to close in the first half of 2023. So that means that this merger is supposedly supposed to close anywhere between this first quarter of 2023 or potentially up to the end of the second quarter of 2023. So the transaction has already been approved by the board of directors of Black Knight and ICE on September 21st, 2022. We hold a special meeting, and shareholders as well has approved this merger. One thing that stood out to me is this act here. It's called Hart-Scott-Rodino Antitrust Improvement Act of 1976. This is basically something that has been put in place to oversee these mergers, right? And then I'll kind of go into that in a little bit. So basically, the FTC is overseeing this merger. ICE and Black Knight each filed their respective HSR Act notification forms on May 18th, 2022. So that's the Hart-Scott-Rodino Antitrust Improvement Act. On June 17, 2022, the parties each received a request for additional information and documentary material. The second request from the FTC with respect to the ICE transaction. So what is that Hart-Scott-Rodino Antitrust Improvement Act? I'll go into that in a little bit. So basically, in terms of like, balance sheet and all that, the company is not bad. It is definitely overvalued at its current price, which is almost $64 a share. One thing that I noticed is their cash and cash equivalents has dramatically decreased. I'm not quite sure from what or for what reason. They seem to acquire a lot of different businesses, so it could have been an acquisition. I haven't gone that deep into it to find that out. But that's a huge difference in how much reduction they have in cash and cash equivalents from just December 31st, 2021. Total current assets a little less than for the year 21. So assets have dropped a bit. Liabilities haven't increased dramatically. So I'm not seeing anything like super concerning in terms of this company's finances. Revenues increased for 2022 compared to 2021, and that's kind of crazy considering the market did really bad in 2022. So yeah, one thing that really stood out to me is net earnings, which is net income. Huge difference in terms of what it was in 2021. That's kind of crazy. It's almost like 3 times. You can kind of see it here. It's almost 3 times what it was in 2021. So in 2022, for the 9 months ended in September 30, net income was $432 million and change, and in 21 it was $124 million. So that's a huge jump in net income, basically net earnings this company had in 2022. Again, kind of crazy considering that 2022 was not a good year for the market or stocks. It wasn't a good year at all. So yeah, in terms of that, I haven't really, in terms of balance sheet and financials, I haven't seen I don't see anything super concerning, except for the big reduction in cash and cash equivalents, which you can see over here. 2021, the company had $78 million in cash, available cash, or easily sellable assets that they can then convert into cash immediately. And for 2022, it dropped down pretty big, down to $16 million, which is huge shift. So what is the Hart-Scott-Rodino Antitrust Improvement Act of 1976? So basically, this act, amending the Clayton Act, requires companies to file pre-merger notifications with the Federal Trade Commission and the Antitrust Division of the Justice Department for certain acquisitions. The act establishes waiting periods that must elapse before each such acquisitions may be consummated, and authorize the enforcement agencies to stay those periods until the company provided certain additional information about the likelihood that the proposed transaction would substantially lessen competition in violation of Section 7 of the Clayton Act. The act also requires a filing fee. The amount of the fee is based on the size of the transaction, with 3 fee tiers that are adjusted annually to account for increase in gross national product. So basically, this act is in place to oversee, to make sure that there's not going to be any huge disadvantage competitively to other companies in this industry by this merger. And then basically the companies that are filing for the merger have to pay a fee that is dependent on whatever tier the size of the transaction lands in. So that's basically what this act is, and is one of the things that I'm seeing that can potentially prevent this merger from occurring, but it doesn't seem very like a huge barrier. And the company that is acquiring Black Knight is Intercontinental Exchange Inc. The share price is currently like $107. This is a big company in terms of capital markets, right? This is the exchanges, basically. ICE is a global exchange clearing financial data and technology company operating in multiple markets and services across 9 different asset classes. So they offer different asset classes, such as stocks, tech, real estate, all kinds of things, right? Even crypto, I believe. So ICE operates 13 regulated exchanges, including ICE Futures. They operate a futures derivative market, meaning that's a big market where airlines buy their oil from big, large corporations, buy their commodities from, to be able to then provide it to the market, right? So that's a huge market. And OTC exchanges in US, Canada, Europe, and Singapore. So they even offer over-the-counter exchanges. These are typically companies that their stocks sell for $5 or under $5. Those are over-the-counter exchanges. It also is the parent company of a well-known New York Stock Exchange and related security exchange. This is the company that basically runs the New York Stock Exchange. So that's why I was saying, if you have ever bought a stock or traded or sold a stock or whatnot, you've probably used ICE in some way, right? So it's a publicly traded company, which I was sharing with you. Their stock is about $107. So they run a lot of exchanges: New York Stock Exchange, New York Stock Exchange ARCA, so all the New York Stock Exchanges, and commodity markets, even credit and swap markets, over-the-counter markets, derivatives, you name it. This company basically runs an exchange in that kind of market. So ICE is also in the digital asset space, forming a new company called Bakkt, which intends to use Microsoft Cloud to handle trading, storage, and spending of crypto assets. They're basically in the crypto market as well. ICE ranks as the world's fourth largest derivative exchange by volume, with 2.26 billion contracts traded in 2019, down 9% from 2.4 billion traded in 2018. according to the Futures Industry Association annual volume survey. So yeah, this is a big company. They run the New York Stock Exchange. I mean, can you imagine the power these guys have? So basically, if you're into trading or anything like that, doesn't matter what brokerage you're using, the market maker you're using, most likely you're interacting in some shape, way, or form with ICE, Intercontinental Exchange Group. Another thing that stood out about this is who's involved in this trade, right? Or in this potential arbitrage investment. And Michael Burry is in this play. You might know Michael Burry is the guy from the Big Short movie. He's the he manages Scion Asset Management, which is a hedge fund. So this is a smart guy. He's in this play. So I was curious to see if anyone with a lot of reputation and credibility is in this this potential arbitrage play. And Michael Burry himself is involved with Black Knights. So you can kind of see here, he has his hedge fund has a position in the Black Knight arbitrage play. So yeah, that's kind of one of the more recent things I've come across that seem pretty interesting and has some potential, right? So let me go into the chart, right? Show you the Black Knight stock, right? So this is Black Knight's stock, right? Stock chart. Kind of see how this thing was pretty up there not too long ago. What was that? November 2020. It's about like 96 bucks, 95 bucks a share. That's pretty high up. And then recent time, it's almost like 64 bucks a share. And I think this has to do with Michael Burry getting involved in the investment. Kind of create a little pop there. So yeah, acquisition price is $85 a share, supposedly closing in the first half of 2023 between first quarter or second quarter. So let's say hypothetically, what would be the return at this current price up to 85 bucks? Geez, that's not a bad return. It's almost like 30%, approximately 30% rate of return. Not bad at all if, the merger actually closes. The risk is if this merger doesn't close, the stock is obviously going to drop, and who knows to where. But I find it interesting that their net income is pretty large, or has gone up a lot recently compared to 2020, and yet the stock price is lower now than it was back then. Just goes to show the stock market makes absolutely no sense sometimes. So that's super interesting. But yeah, that's basically the chart right there, kind of giving an idea of where historical prices have been for Black Knight stock, right? So yeah, with that being said, I'll leave you guys with a market quote that I like. So John Maynard Keynes, who incidentally made most of his money speculating on commodities and currencies, compares speculating to a wager on the outcome of a beauty contest. You don't bet on the girl you find the prettiest, but on the one you think others will prefer. And also some history. I like studying or learning about market history because they say what occurred in the past occurs in some way, shape, or form again in the future. And this is reference the Australian market collapse of the late 1980s. So many of the corporate cowboys, and by proxy, the cowboy bankers, plunge into the commercial property market, oblivious to the lesson of history that a share market, meaning stock market, collapse is usually followed a year or two later by a property collapse. And this is from the book The Bold Riders by Allen and Unwin. Yeah, so basically, with that being said, thank you guys for watching. I appreciate it. And I hope I shared some valuable information with you today. And I'll talk to you guys soon.